And now to our market monitor, our weekly guest who's strictly focusing this evening on ETFs. He's got 3 picks that he says are a great way for investors to take advantage of the strong global growth we've seen. It is his first time on the program, and we welcome Jason Browne, Chief Investment Officer at FundX?
FundX Investment Group, yes.
FundX Investment Group. Tell me why you are partial to ETFs as opposed for individual investors, as opposed to building a portfolio of individual stocks or maybe managed mutual funds. What's the appeal?
Sure. At FundX, one of the things we observe is that market leadership changes over time. So sometimes growth strategies lead, sometimes value strategies, sometimes it pays to invest overseas, sometimes you're much better off focusing domestically. When you invest in an ETF, you're not only getting diversified exposure to whatever market you want to get, but you're able to change your strategy just by changing one symbol. You don't have to change your whole portfolio.
So you're going to give us 3 picks here. Are these picks that you are comfortable holding, or ETFs you can trade in and out of during the day? I assume that's not what you're advocating.
Absolutely not. So we started as a company investing primarily in mutual funds. And we use ETFs just as any other mutual fund. So these are really designed, even though you can trade as often as you want, usually you do so at your own peril. Usually for ours, we really want more of an intermediate.
So let's get to your picks here, and we're going to begin with one that is about as familiar as they come. It is an ETF, the Spider Dow Jones Industrial Average. DIA is the ticker symbol.
Sure.
Why start there?
Main reason, I think, is that right now, if nothing else, you shouldn't be fighting this market. You've got to embrace it in some way, shape, or form. A lot of people might say, why not just buy the S&P 500? Currently, you're just better served investing in a more concentrated portfolio like the Dow Jones Industrial Average.
It has done a little better.
It has done
this
better.
year, and certainly you get all the blue chips there. Next one is iShares MSCI Momentum Factor ETF, the ticker MTUM. 123 stocks in it. How were they chosen?
Sure. So this is a factor-driven strategy. So as opposed to the Dow, which is just buying the market, here, instead of buying, let's say, cheap stocks, you're buying stocks that have good momentum on a risk-adjusted basis. Currently, you actually own a lot of the same names, but this fund's done a really good job of actually adapting to the changing markets over the last year. So initially dividend stocks, then mid-cap stocks.
And a quick thought on the final one, that's the Vanguard FTSE Europe ETF, VGX, the ticker.
It's actually VGK.
VGK, I'm sorry.
No problem. That gives you a great exposure to
eyes aren't what they used to be.
Sure.
Go ahead.
To be able to diversify further into Europe, still owning household names. You're owning Nestle, you're owning HSBC holdings and so forth. So it's kind of the same theme of owning the global titans, and at 10 basis points, it's an easy way to add Europe exposure to your portfolio.
You just hit on the really the key point here, I think, is the low expense ratios that these funds have.
Sure, low expense ratio is definitely a key factor. I mean, the only negative thing versus a mutual fund is that the managers don't get to pick which things they might want to exclude from their holdings.
That may be a virtue, though.
It can be a virtue. Absolutely.
Jason, thank you very much. We appreciate it.
Thank you so much for having me.
Jason Browne with FundX.